Good evening. This is the video newsletter for Buy Sell Short for Wednesday, March 21st. Starting off here with the Dow 15-minute chart. As you can see, that huge run we had over the last couple of weeks may finally be coming to an end. And of all the days, we had Goldman Sachs come out today and say, right now is the buy of the generation for stocks. Now is the time to get into the market after we've run up, 50% over the last 4 years. Now is the time to buy stocks. If there was ever an eerie call for us after such an extended rally, that is probably it. Looking at the 15-minute chart, new highs over the last few days. SMH, same thing. Russell, we finally broke through that 833 level. S&P 500 over 1400. So why does this market rally feel so blah? It's like pulling teeth in this market lately. Even though we continue to move to new highs, it just does not feel right and has not felt right for the last couple of days. I think today I had the most trades I've had in a long time just to eke out a small little gain. And, one thing that is very telling about this market, and I was talking about it in the chat room before the close, peer momentum is as dead as it has ever been. I don't remember ever seeing a market with the strength we are supposedly seeing and just the lack of participation in peer plays. And what I mean by that is you have a stock. Let's take GALE, for example, breast cancer biotech stock, up 100% over the last couple of days. Typically, especially in a market like this, you would see traders falling over themselves, jumping into every other cancer biotech stock that there is. Not the case. Only stock running. PWAV, tech stock, up huge over the last few days. We actually jumped into that one a week or so ago. It's up, 75% now. Peers, dead. OPXT, dead. ZOOM, dead. Another case in point. Social media stocks. Now, there was a little bit of momentum today, some early pops, but even when the leader, Zynga, ZNGA, started its big run, really no participation in the other social media stocks. And what has ended up happening, in my opinion, you got a lot of traders trying to scalp for 1 or 2 cents, and when you multiply that by hundreds and thousands of traders, this is what happens in a lot of stocks. And a lot of that goes back to the daily chart, where this is the extent of the sell-off we have had in the last 4 months. That's it. One day, 200-point drop. That is why you've got so many traders still sitting on the sidelines expecting the next shoe to drop and trading accordingly, meaning they get in, they shit their pants, they get a couple of cents, and out they go. Or they get in, the stock has a small dip, they're on the ledge of their house, about to jump, commit suicide. Oh my God, the stock's down 2 cents. What the hell am I going to do? That is the problem with this market right now. This was the problem back here. And what we said was we either needed a breakout to new highs or a sell-off. Well, we got a breakout to new highs, and we are still faced with the same kind of market. So, we're probably going to need a decent-sized sell-off. When's that's going to come remains to be seen. 50-day moving average, 13K level, continues to be rock solid support. Now, the Russell did get a nice little pop off the bounce, but we still really have not seen that spread out. I would have expected it to spread out more. And what a lot of it is to do, we've got nice strength, and a lot of stocks are not breaking down for the most part unless they get really bad news or do financing, which we're starting to see a lot of. A lot of companies coming out and doing financing. But what we're seeing, and I mentioned it a few days ago, is stocks moving 1%, 2%, and then you look back and a week or so later, the stock is up 20%. These stocks, they dip, they pop, they dip, they pop. As traders move in and out, they take their 1 or 2 cent scalps, and they're big winners. HIMX, as an example. Stock, since our breakout move, is up, 20%. Nice little move. Each day it gets to a key level, breaks through it, scalpers come in, pushes down a little, shakes them out, repops again. Seeing that a lot, and that is just the way it is in this market right now. As I said in the chat, what I'm looking to do for the rest of the month, we're just going to stick to charts. Chart plays are working. Swing chart plays are working. enough of this peer crap. If a stock has a nice chart, has a nice setup, we play it. Doesn't matter if it's a peer or not. Versus forcing trades because ABC is a peer of XYZ, which is up 50%. That's not working right now. When it starts to work again, which it will, we'll move back into it again. For now, we're going to stick to nice chart setups. HIMX, nice little breakout, rule of two play. Next stop, 210 to 220, and these stocks have been blowing up recently, especially when they get to this price level. Should see some nice continuation on this little baby tomorrow. THQI, nice breakout today. Tried to break out yesterday, shook out a lot of traders. We jumped into this one today, 61 cents. Got as high as almost 68 cents, 67, high a day, broke through that resistance level, and then the scalpers came in again and it pushed back down. But we were able to close above the 50-day moving average. This is flagging nicely. It has broken its downtrend line from that December sell-off, and I think we're going to see this one nicely higher over the next couple of days. That upper 70s level is our target on this one, and right now we're looking at stops at the 20-day, 58 cents. Small downside, very nice near-term upside. NTWK, still waiting for that positive MACD cross, but we are about to get the stochastics break up through 20. On-bounce volume shows that the buyers are coming in here. And what's really holding this one down is the financing that was really done. But this one is coiling for a move. And I think we should see that move in the next couple of days. 50-day moving average up there at 53 cents is our target. If you're looking for stops, 37, 38 cents. HILL, old favorite of ours. Itching to break out here over the last couple of days, and really over the last 2 years, the 145 has been a nice breakout level on this stock. 165 to 175 is our target in here. Has very nice support here at the 137, 138 level. I am accumulating this one 145 and under. Probably stops 135, 130 area, even a dip down to this zone, I would probably be a buyer in this market. INO, little cancer biotech stock. These stocks are actually waking up slowly but surely, but I like the chart setup in here. These guys are loaded with cash. Per their earnings report, they got enough cash till the end of 2013. No dilution risk. We are about to get a golden cross here on this chart, 65 cents, and it's rock and roll time on this baby with stops at 58 cents. Very nice risk-reward stock on a biotech stock that's sort of similar to CVM that has gone vertical on its breakout over the last couple of days. So we've got a nice little setup on this one. KVA is continuing to coil here. 155 is our breakout. And just like on the golden crosses we see on the Dow 15-minute chart, we got our cross. So what happens? A couple of days of weakness. If we follow the golden cross dip and run pattern, we should see this one go over the next couple of days. So waiting for that breakout on volume. VG. This was a nice little runner for us last week. 220 to 236. Has been retreating over the last 2-3 days. Looks like we put in a little bottom on this one today. 225 is the buy. 242 is our target. 220 stops. We should see this one pop again over the next couple of days. Swing plays have been doing very, very well lately. And this one is setting up for a nice little move here too. So that's it for the video. Swing plays are working. You just need a lot of patience. Not a lot of patience. I mean, a lot of these plays. Look what happened on LXRX. Took a couple of days for that one to break. Traded as high as 201. Did give it all back, but it took a couple of days for that stock to do its 10-15% pop. So it's just a matter of being a little patient on these plays, guys. And, keeping an eye open for the retrace that comes. But until that happens, something to keep in mind. Even though we get all these dips in the market, dip buyers are coming in. Dip buying is working in this market right now. You just got to lower your expectations, not shit your pants when there's a little dip on the market. And unless we get a Dow breakdown through 13K, maybe then we can get a little bit more cautious. I mean, we could get a retrace all the way back down to 12,700, which is a 500-point retrace, and still be fine and dandy on the market. And actually, a 500-point retrace is exactly what this market needs in order to, get traders in the mind for buying again. So that's it for the video. If you've got any questions, feel free to send me an email, feedback@buysellshort.com or .net. Otherwise, I will see you guys in the chat room tomorrow. Good night.